Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, the importance of having your car insured cannot be stressed enough. Car insurance plans are not just mandatory by law, but it also happens to be an effective means of caring for your car. What's more, it protects your economic interests as well, especially in case of any unfortunate eventuality. Today, we'll be talking about car insurance in detail and understanding what gets covered under such policies, what doesn't, and what are the different kinds of plans which are available. Let's welcome Anjula Dheer. Anjula, welcome to the show. You're, of course, director with Policy Bazaar. Now, tell me, what are the different kinds of insurance covers available for vehicles?
You have a third-party liability cover, which basically covers damage or liability to the third party. It could be injury or it could be damage to the vehicle. Your own vehicle is not covered in the third-party insurance.
So it's a limited kind of insurance?
Yes, it is a limited kind of insurance. You have a comprehensive cover. The comprehensive cover includes the third-party liability, also damage to the own car or the vehicle owner.
Third party is the bare minimum legal requirement as far as the insurance policy is concerned by law. Talk us through comprehensive motor insurance.
So comprehensive motor insurance covers any damage to your car because of accident, because of theft, any natural calamity, or even to the owner of the car if there is any accident.
Right.
Plus, in the comprehensive cover, of course, there is the third-party liability cover, which covers any accident to the third party or any damage to the third party.
And of course, then we have add-ons, but we'll get to that in a bit. But, the question I wanted to ask you was about IRDA. Now, recently, the IRDA has raised third-party motor insurance rates. I'm going to read this out. Across 4 categories, private vehicles, two-wheelers, commercial vehicles, and goods carriers. Why this increase, and what does that mean for us, people who own vehicles?
Basically, IRDA has increased the third-party cover in the categories, Arjun, that you mentioned. For your motor vehicle, which is less than 1,000 cc, the increase is 30%, and for a motor vehicle 1000 cc to 1500 cc, it's 20%, and 1500 cc and more, it's again 20%. Basically, the IRDA has increased the cover, the insurance for the third party because of the claims. Because the insurance companies felt that the premium was not adequate to cover the increasing claims which were there, because we've seen an increase in the claims which are being made. The average size of the claim has gone up 12 times compared to what it was in 2013. So that's why it has increased. But if you really look at it, the third party cover is a very small part. It's only about 10% of our comprehensive cover. So even though the cost has gone up by, say, 30%, and if you look at it, it's only 10%, the third party covers 10% of your total comprehensive cover. So the total net impact is very minimal, only 3% to your total insurance cost.
So you're saying it's not going to really impact you too much, but it does rise by 30% if someone has a very basic third-party insurance. So is there any way that a person buying insurance can actually save some of that premium outgo?
Yes, Arjun. You can reduce your premium outgo by, first increasing the deductibles. What I mean by deductibles is that if there is any claim, before the insurance company, gives a certain amount, if you agree to pay a certain portion of it, then your total premium will come down. Higher the deductibles, lower the premium that you will pay.
What about a clean record as far as driving is concerned, or any other way of saving a little bit more?
Yes, Arjun, if you drive vehicle very safely, so basically you cover the own damage cover, you get a discount there. So you should drive your vehicle safely and not recklessly to get a lower premium again.
Right, and that's good advice, I guess. Drive safely, and that's the important part as far as being on the road is concerned. But what if one hasn't been able to renew the car license? I mean, do you get that break that two-wheelers sometimes get, or have started getting, that 90-day grace period? Do cars also get that kind of a break? Can you get your insurance with all the benefits due?
No, Arjun, it is not applicable as far as motor vehicles or cars are concerned. In cars, if you don't renew your motor vehicle before the expiry, it will be a fresh policy. And when it is a fresh policy, you also have to get insurance inspection done. And at times when you get inspection done, there could be a pre-existing damage to the car which will not be covered by the insurance company, or because of which even your premium could go up. So you should always renew your insurance on time. Though in case of third-party premium, the third-party premium, there will be no increase in cost. It will remain the same because it's fixed by IRDA. But if your vehicle is not covered, or if the insurance is not applicable you've not renewed your vehicle insurance and at a certain period of time, then the third-party coverage will not be there if the valid policy is not there.
Right. So I guess the sensible thing is to make sure that you renew your car insurance on time. What about inclusions and exclusions as far as car insurance is concerned? I mean, what are some of the ins and the outs in that sense?
Okay, talking about the inclusions, in a comprehensive cover, any damage to your car because of calamity, accident, theft, burglary, riots are included. And what is not included is any mechanical or electrical failure. That is not included. Wear and tear, if you don't have a zero depreciation cover, that is not covered. If you are driving out of the geographic zone, it is not covered. Without a valid license, driving, or driving in a drunken driving, or if you are drugged, you are driving, this is not covered in the insurance policy.
What about add-on covers? We were talking about add-on covers, and what are the kind of add-on covers that people can opt for that, you know, further protect them, give them that protection, kind of a shield as far as driving is concerned for their cars, for their families?
There are a lot of add-on covers which are available. The most common one is a zero depreciation cover, which takes into account the depreciation cost of the car. So basically, if you are filing a claim, the depreciation cost will be insured by the add-on. If you take it, then there is a no claim bonus protector cover, wherein, you know, the no claim bonus, you have to pay an add-on costs, and your no claim bonus gets protected even if there is a claim. You have a roadside assistance cover. In case of you get immobilized because of the car breaking down, you could take roadside assistance. You could take, you know, accommodation, towing facility, medical facility is there. Of course, then you have cover for covering the consumables, your nut and bolts, etc., which also get covered if you take a consumable cover.
Definitely. Now, the process of filing claims. Now, what kind of a process is it, and how does a person ensure that the claim is not rejected? What are the do's and don'ts for that?
For filing a claim, one thing you need to keep in mind is inform the insurance company before you undertake any repairs. The insurance company needs to be informed within 24 to 48 hours in case of any accident. Then there should be, the person should have the driving license who is driving the car. And of course, you should have a valid insurance so that you can file a claim.
Anjala, you know, we've been getting different questions from our viewers. They've been writing to us. Now, Piyush Sharma is 36 years old. His annual income is around 5 lakhs. His wife is 31, is a homemaker, and he'd like to opt for a pure term insurance plan. And he wants to know if 50 lakhs would be a good investment cover for him, for his family, if something unfortunate does happen to him.
Mr. Sharma, we would like to recommend that you should go for an insurance cover of at least 1 crore, as you know, as your income is 5 lakhs, and you should take a cover of at least 15 to 20 times of your annual income. So we would recommend 1 crore and a pure term cover. And you should also look at options, whether you want lump sum to be paid if there's any eventuality, or you want a deferred payout option wherein some lump sum amount will be given and some amount will be given at regular intervals.
Right. So a lot of options available by the insurers now, right?
Yes, a lot of options available.
So we've got Kishore, 40 years old, and he would like you to recommend a health cover for his entire family, including his wife. She's 38, his son is 15 years old. What would you say as far as a health insurance cover?
You must definitely take a health insurance cover. What we would recommend is that you take a family floater plan of at least a coverage of 5 lakhs for your entire family. Keep in mind that there is a no claim bonus facility cover, that in case you have a no claim period, the sum assured goes up. And the other thing which you should keep in mind is there is a restoration benefit. In case you use the sum insured, the amount to which it is insured is used gets restored back during the policy term.
So it's good he's thinking about insurance cover, but a lot of people actually defer that and say that, you know, health cover is not important at all. I mean, we've got another person who's written to us, Rahul, and he asks for advice. He's about 45, his wife is about 42. They don't have a health cover. I mean, what would you say to them?
If you are 45 years, you have said he's 45 years old, he must definitely go for the cover at the earliest, because typically, currently, if you don't have any pre-existing disease, and as age catches up, you know, there are chances of having diseases, plus there is a change in slab of premium once you cross the age of 45, plus all insurance companies typically do a medical checkup before they give you the insurance policy. So you must not delay buying the insurance cover, and you must buy it immediately. And the other thing, we would suggest that you could probably pay up the premium for 2 years, because if you pay the premium for 2 years, the slab change of the increased premium will not happen because of age. Plus you get a little bit of discount when you're paying 2 years premium together. And like I said, you must not delay it any further. Keep in mind no claim bonus benefit plus restoration benefit when you are considering the plan you choose. You should look at a family floater cover for your entire family for at least 5 lakhs.
We've got Josefa, who who's asked us that she wants to opt for home insurance for content only. She says her one-bedroom flat in Pune, the society already has insurance, but she wants to know if it is viable for her to opt for a home insurance policy only for content. What are your recommendations to that?
Yes, you can take a home insurance policy only for content, whatever contents like white goods, jewelry, etc. you want to be insured. Camera, you have to declare that, what is the value, you will have to determine the value you want to put across, and you can take a contents insurance. You need to keep in mind, in case you need to make a claim at some point in time, you will need to have copies of the invoice. So you should keep the...
So they don't have to be submitted to the insurance company?
They don't have to be submitted to the insurance company, but if claim is made at any point of time, you might require it at that point of time. So keep the invoices intact for the contents.
And we've got Ravi, and he would like to know a little bit about online term plans. He'd like to know whether they are useful, how expensive they are, and also whether it makes sense for him to take a rider for disability with that.
Yes, term plan is a very important plan which everybody should have as part of their insurance portfolio, because if you are the breadwinner of the family and there is an eventuality, you will be able to provide for the family.
And term plans are actually pure insurance plans, right? They don't come with any investment criteria, or do they?
No, if you're taking a pure term plan, then it is only for a pure insurance. If you take ULIPs, they could have a life cover as well as some returns on it. Right. And when you're talking about the pure term plan, you should definitely have it, because it will take care of your family's needs if you're not there. Plus, you know, if there are any liabilities that can be paid off with the sum assured that you receive in case of an eventuality. And these days, you know, you have options wherein you can get a lump sum amount, and if you don't want a lump sum amount, you can get some amount at one point of time and remaining amount staggered over a period of time or deferred over a period of time. There are some plans which even give you monthly payout, so that, you know, which keeps a regular income for the family available in case of the death of the breadwinner of the family. And you also asked about the disability rider. Right. Yes, you know, there are certain insurance companies which offer disability rider as well, and you must consider that as well. And online policies are cheap, come at a lower premium compared to if you buy it offline, and you must look at, and you're able to research, make a informed buying decision which is the best policy for you. So you should look at comparing and buying when you're looking at buying term insurance.
Right. Ravi really hasn't you know, given us an indication of his age and all, but would you say it's better to take term insurance at a younger age as opposed to an older age? I mean, is there any financial benefit to that?
Absolutely. First of all, you never know when eventuality will happen. So it's best to cover yourself as early as possible, and your premiums are lower if you take it at a
and they're pretty much fixed, right?
And they're pretty much fixed.
They don't go up like a health insurance cover or other insurance covers.
No, they do not go. They do not increase like a health insurance cover as long as the term of the plan is there.
Right, Anjala. Of course, you know, another important topic is right in front of us, staring us on our face, is the earthquake in Nepal. And you know, we've seen earthquakes in India. We've seen massive tragedies across the world. And, you know, I want to ask you specifically about the question of home insurance plans. Now, are they popular in India is my first question. And if not, why? And what do they cover? Of course, we'll get into that. But why aren't home insurance plans really looked at as a priority here?
Arjun, you are absolutely right. Home insurance covers are not looked as priority here. And ironically, if you look at the house is the most expensive asset that we have, even more expensive than the car which we buy. But our car is insured, and our house is not insured. Basically, there is no awareness. People think it's not important to get the home insured, and people think the cost is prohibitive, which is actually not true. If you get your home covered, the costs are not much. Within 5,000 to 6,000, you can get a decent coverage for your home.
For something that costs probably lakhs of rupees.
Probably even crores of rupees, you can get a decent cover for a small amount.
So it's probably not happening because it's not mandatory, right? It's not mandated by law. But what about home insurance cover? Walk us through what all that covers, what kind of insurance plans we have, because it is an important subject. I mean, I was looking at the papers the other day and it said there's a rush right now, even in India, to buy home insurance covers. Now, that's not the right attitude. I mean, we should be buying it naturally, right?
You're absolutely right. After the Saturday calamity, we've actually got a lot of queries and a lot of transactions happening on the home insurance space. Basically, in the home insurance, what is covered is the cost of reconstruction. So it is basically the reconstruction cost which is covered if there is a loss to the property, to the home because of natural calamity, fire, burglary, etc. Then the restructuring cost, which includes the material cost and cost of labor, is included. If you take a policy with the indemnity clause, then it takes into account the restructuring cost plus the depreciation cover which is there. The other option which you have in home insurance is covering your valuable assets or the contents which are there. So you could have a home insurance.
That's a separate insurance that you need to take.
You could have a home insurance standalone just for reconstruction. You could have a combined insurance for reconstruction as well as valuables which are there in the house.
Now, is the process cumbersome? I mean, can somebody get it quite easily, or is there a lot of paperwork involved? How should one go about getting a home cover for the structure, let's say?
It is not a cumbersome process. In fact, at Policy Bazaar, you can also do it online without much of a hassle. And it is just about getting into the act of taking home insurance.
So you don't need to provide huge numbers of documents and paperwork. And how do you actually value your asset? Is it based on market value, or I mean, how would you advise people to go about that?
It is based on, you should make sure that it is based on market value, and of course the insurance companies also see that the market value is being put correctly.
Thanks, Anjula, for joining us on Policy Bazaar. That's all the time that we have on this show. But last week's question was, are two-wheeler insurance mandatory? Is two-wheeler insurance mandatory in India? And the answer, of course, is yes. And congratulations to Nikita. You won a 1,000 rupee gift voucher. And this week's question is, what is a no-claim bonus or an NCB? A, is it a discount on a premium on own damage cover? B, discount on premium on third-party liability? And send in your entries to queries@policybazaar.com, and we'll see you next time with another show. Goodbye.